Okay, I'm really excited because I've got a huge announcement that I want to share with everybody. But this is going to happen at the end because first, I want to start everything with a little education. Okay, so we're going to talk about how a score is broken down, how the FICO score is determined. What are the factors that hit your FICO score the hardest? Okay, so I'm going to tell you all about that, and then I've got this great announcement I'm going to give you at the end of this video. But it's important that you pay attention to what I'm going to say in the beginning because it'll help give you an understanding of how to keep your credit in a positive place once you get it fixed, and I'm going to help you get it fixed, right? Okay, so first and foremost, the number one most important thing is very obvious: pay your bills on time. Okay, I know it might hurt to hear, considering that you're probably on this video because maybe you've been behind on some payments. Not always your fault. I mean, in a sense, because I mean, maybe you had a medical situation where you've got medical bills out the wazoo, and there's nothing you can do about it because your income hasn't increased, right? So 35% of your FICO score is determined by how quickly you make your payments. So for example, if you've got 30-day, 60-day, 90-day lates, it is crushing your credit report. Really important to understand that, okay? So that's number one. Number one is make sure that you are paying your bills on time. So that's a huge factor. Number two is actually, how do I put it? It's how much you actually owe on a credit card. So for example, if you have a credit limit of $1,000 and the balance that you owe is $10, that means you're at 1%. That's your credit usage is 1%. Okay. If your credit usage is at 7%, that means you've spent $70 on $1,000 credit card limit. Okay. So you've got $930 left to use on that credit card. Now, the reason why I use those specific numbers, 1% and 7%, because that seems to be the sweet spot. Okay. If you're sitting between 1% and 7%, then you're doing well. Okay. That doesn't mean don't use your credit cards. It just means make sure that before the credit card companies, your creditors actually report to the credit bureau, make sure at that point the number is sitting at 1 to 7%. You can probably hear my little lady in the background, so sorry about that. But that's your sweet spot, 1 to 7%. Okay. There's later on, I'm going to do a video in detail on how to really play around with that and make it work for you. But the basics are very important to know. You want to be sitting between 1 and 7% in terms of your credit usage. Now, having said that, you may be asking yourself or asking me, Brad, why do I spend any money on the credit report? Wouldn't it help me if I was at 0%? Here's the problem with that. If you're sitting at 0% when a lender is looking at your credit report, the problem with that is they don't really have anything to work with. They don't know, they can't see that you've spent the money and you've paid it back. That's what the problem is. They can't tell that you're actually using the credit card. Just having a credit card in your pocket doesn't do you any good in terms of making sure that you have a strong credit history. You need a history that shows that you use the money that is offered to you to use and you pay it back. That is what it's all about. 1% and 7% is the sweet spot. Okay? Good to know that. All right? Credit history, the length of your credit. How long have you had certain accounts? How long have you been in the game? That's basically what it's talking about. That's 15%. It's a very large amount, which is why you're not going to see a 21-year-old with an 800 score. It's just not going to happen. Or it's very rare anyway. Let me put it that way. I suppose maybe that could happen. I have not seen that myself. But usually you're talking about somebody who's at least in their 30s or 40s who's sitting up and over $800. Okay. I'm sorry, 800 points on their FICO score. So that part, you just got to make sure that you're developing a history right now, so that down the line you're like all the way up and over 800 on your credit score, and you can basically do whatever you want. People will be throwing money at you, hoping that you'll borrow money from them because they know you'll pay them back and you'll pay them that interest, and that's all they're worried about is getting that cheddar, right? That's all they're worried about. Okay, number 4, really important. Okay. Inquiries. I know that you know about inquiries, okay? So I'm sure you've heard there's like a soft inquiry and there's hard inquiries, right? Soft inquiries, generally speaking, they're not hurting anything, and that's a lender looking at something very basic. Basically, when you see a pre-approval, that's a soft inquiry that has occurred. Okay. But when you're actually going for a loan, whether it's a mortgage or whatever, that's called a hard inquiry. And let me tell you something about inquiries. If you go and buy a car or try to buy a car and your credit is so-so, I promise you, those car dealers are actually going to send your credit to as many creditors as they possibly can to see that they can get a good rate so they can get that monthly payment, which is what we all, when we go in there, we're just looking for how much can I get on that monthly payment, which is not the right way to do that, but that's a whole nother discussion. But they're going to send your credit to, could be half a dozen to a dozen different creditors in order to get you the best number that they possibly can to make sure that you sign the on the dotted line on the bottom. Okay. So just an extra tip. Okay. For this, like I said, this is number 4, new credit, which is basically inquiries. Okay. Extra tip on this one. Make certain that if you go in, either you've already gotten a loan from your own bank, or if you go in, you say, hey, look, I only want you to look at X, Y, Z, and make sure you've done some research on whatever lender that you want to use. Okay. That one that will likely accept you. Okay. So that's number 4. You don't want a whole bunch of inquiries. You just don't want them. If you've got, and by the way, those should fall off after 2 years. If you're looking at your credit report and they're on there beyond 2 years, there's a problem. Okay. So inquiries, that's number 4. Number 5. All right. Types of credit used. You need to show that you've got some kind of, what's the word I'm looking for? Man, my vocabulary is escaping me all of a sudden. You need to make sure that you have some variety in the types of loans, the types of credit that you've acquired, whether it's installment loans or revolving. You've got to have a multitude of different types of lending scenarios so that when a creditor looks at your credit report, they see, okay, they've done different things and they've done them successfully. I can trust this person because these other people trusted this person and they came through. That's what it's all about. That's going to make up about the other 10% of your credit report, of your credit, your FICO score, right? So when we're talking about installment loans, the most obvious one is your car payment. Like that's obviously the most obvious one. You got your house note, and of course you've got your furniture, for example, things like that. Those are installment loans. The price is going to be the same each and every month for a specific period of time, whether it's maybe 5 years on an auto loan or 30 years on a home loan or 1 year on some furniture, 2 years, whatever you got. That's an installment loan. Revolving credit would be a credit card, for example, or a line of credit that you've actually used. Those types of things would be a revolving account. And I'm really focused on the credit cards when it comes to that. Okay. They want to see that you've gotten both of them and you've done them both well before they lend to you. Okay. So hopefully that's been really helpful. And now for the most exciting part. So I'm really excited about it. It's taken me a while to figure it out because with this COVID, it's really tough for people to pay for credit repair, right? So what I've developed is kind of a symbiotic relationship where I'll actually put together the information for you, and you get to go ahead and mail it out yourself. Now, here's why this is really cool. Okay. Number 1, you're taking action for yourself. You made the decision. I'm taking control of my money. Okay. That's number 1. Number 2, I will not write for you dispute letters. Okay. They're not nearly as powerful as what I do. Okay. What I do is I challenge the creditors and the credit bureaus. I challenge them to make sure that they're following their own rules in terms of how they're getting the information and dispensing that information. And there's a couple little tricks in there that once I send that to you, you're still not going to know what I did. I promise you. You'll see these, and they're like, some of them are like 13, 14, 15 pages long. Like what I do is very specific and it works. Oh my God, it works so well. It's incredible. So really important. Like you've seen in my previous video, you don't want to do dispute letters. They're just not as strong. 609, I'm sorry, it's just not as strong as what I do. Okay. What I do works faster. Okay. So anyway, you'll see how intricate it is. I don't do templates. Your letter will be personalized and it will be amazing. I mean, amazing. And it will get results. And also, there's algorithms I put in there that actually allows it to go through their computer system, and their computer system will recognize it and take action. Okay? I'm not going to explain that to you. That's my little personal secret. And there's a few other people, obviously, that know how to do this, but it's not a common thing. Okay? I promise you, it's not common. But I'll send those letters to you. I'll email them to you, and then you can actually send those letters out. Again, these are not dispute letters. Let me repeat that again. These are not dispute letters. We are challenging them on how they're acquiring and dispensing that information based on, quite frankly, not only their own rules, but how those rules have been interpreted in the court of law in recent years. Okay? So I'll prepare those for you, get those out to you, and you get to send them out. Okay? I'm going to do that for you. This is very limited. I'm only doing this for the first 25 people that reach out to me. I'm going to do that for you for $125 one-time fee. One time, $125. I'll get those letters out to you. All right? You're going to see amazing results, and you'll see them very quickly when I do that for you. All right? If you decide you want to take it even deeper, because this will get a lot of it all off most of the time, that's what's going to happen. And I do offer a money-back guarantee, by the way, if you want to talk to me about that when we have a conversation. But the biggest thing is you're going to get results, and you're going to get results quickly and effectively, right? There's lots of tricks involved that I'll discuss with you over the phone. But again, you're not going to see this anywhere else. You go to other places, and what they'll do is they'll either charge you some crazy one-time fee, $500, $1,000. What I do actually, the few people that know how to do it charge like $1,500 one-time fee for. So it's serious. Okay. I'm getting it to you for $125 one time. But again, I can't do this a lot. So I'm only taking the first 25 people to do it. So you need to move fast on it. Okay. The first 25 people that reach out to me, I'm going to do it one-time fee, $125. This is kind of a COVID special thing that I'm doing. I'm so excited about it. It's crazy. I didn't realize until I did the math on how this could possibly work, and I don't lose money on the situation. Okay. But I wanted to help out 25 folks just to get things moving, help you improve your situation, and that's it. Right. So I just wanted to point out some of the items that are going to get hit by these challenges, which is really going to improve your credit. I'm so excited about that. So first and foremost, of course, you're going to have bankruptcies, student loans, collections, medical bills, of course. All these different types of credit issues, whether you've got an eviction, apartment situation, repossessions, all of those different items are going to get hit by these challenges, and you are going to see big changes with your credit. So make sure you take advantage of what I'm offering you right now, because it's crazy, and I'm like I said, I'm ridiculously excited about it. Okay, so. That being said, I just want to throw out a couple other things. I've actually been vetted. My company's been vetted by military housing. So I'm vetted by the military. They trust me to do it. You're dealing with the real deal. Website, seriouscreditrepair.com. You can reach out to me through the website, or you can just message down below. Make sure you subscribe and like my page as well. Because I'm going to be pushing out information all the time that will help you so that in the future, even once you fixed your credit, you know how to keep it there. So important, right? SeriousCreditRepair.com. I'm putting the link down below. Okay. I've got a Facebook group. I'll put a link to that below as well. And I'm always putting new information down in there. And I also share other information with you that'll help you moving forward in terms of finances, not just with credit, but with building yourself up financially so that you can protect your family. Sound good? Awesome. So make sure you reach out to me, because I'm so excited about this. This is crazy. All right. I'll talk to you soon. And until then, love, peace, and hair grease.